Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Axon would like to give the loyal listeners of the Moving Iron Podcast a free pair of deerskin gloves, not deerskin gloves, just deerskin. It's going to be a good day for those gloves out here, Chip. It's snowing. Is it snowing up your way?
It's definitely not snowing. It's almost hot.
Yeah.
We were at 75, 77 degrees yesterday, so I'll take it in November.
It was 2 days ago, it was 75 degrees, and then it kind of slowly dipped off. And now here we are at it snowed last night by a couple inches, maybe 3 inches of snow, and it's like whatever 20 degrees this morning. So great.
You can have that. You keep that.
Yeah. It's beginning to look a lot like November around here. Good times. All right, man. So if you want some of those deerskin gloves, send an email to marketing@axontire.com and they will send those to you in the mail. Also, they are going to do a $50 discount on your registration for the 2023 Moving Iron Summit coming up here in Nashville, Tennessee, September 11th through the 13th. So take advantage of those great offers from our friends at Axon. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. And no matter how you buy your ag equipment, whether that's from a dealer, an auction, or private party, AgDirect can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com. Tractor Zoom has access to over $20 billion in heavy equipment sales. Tractor Zoom's Iron Comps is the industry's trusted solution for transparent equipment values and auctionable pricing insights. And finally, this podcast is brought to you by Anvil AppWorks. The Dealer Connect CRMI app with integrated inventory management is an affordable Salesforce-based solution for your dealership. Create connected customer experiences and transform how you work today. Chip Nellinger is with Blue Reef Agri Marketing out of Morton, Illinois, and Chip is nice enough to come on and talk about what's happening. Chip, how you doing this morning?
Doing well, Casey. We got a pretty interesting week we've had here, recording this on a Friday, and say
the least.
Man, we've had everything. We had the Black Sea export channel suspended and then put back in place all within 24 hours. Interest rate increase by the Federal Reserve. Got to wake up this morning, crude oil's up almost $4, and all this enthusiasm that China might, kind of go back to normal, so to speak, or, not have such stringent lockdowns.
Yep.
Crazy week. And then now next week we got a crop report, and
yep.
Who knows what we'll have as far as headlines go next week. So this thing is it's like a yo-yo.
Yeah, this China changing up their COVID, their zero tolerance COVID thing. I think that's probably one of the things that's the step in the direction that's going to help kind of get the world back going again. I mean, as much manufacturing stuff that comes out of there, as much go into there. This inflationary system that we have just by opening China back up and getting things back rolling again should relieve a lot of that pressure. I mean, do you think that's kind of in the same camp there?
Well, yeah, I think that's why, you've got crude oil so enthusiastically higher today is that China's such a big driver of world growth. And, you can argue all you want. I get the reason for their lockdowns. They don't have the medical system like, many parts of Europe, United States, and other areas. So I get that on the one hand, but, on the other, it's, almost like they were kind of trying to do that to punish the world or slow it down some. I don't have my tinfoil hat on today yet. I can get it, but it almost seems like some of it was on purpose. And so, there's such a huge driver, not only of exporting things to the world, but, importing things into their country, raw materials, energy products. And so if they're going to get back and, let their people live again and be out and about and enjoying life as we knew it before COVID, it could be a good driver to the entire world economy. And, with that comes extra demand on crude oil, demand on, grains and proteins. And, I think as you look at things, copper massively higher here in the overnight and early mornings. Some of the soft commodities, it really is a big driver. We're so interrelated now in the entire world that it could be a big thing. But at this point, from what I've read, it's just kind of a rumor. I don't know that there's been anything official yet. And so it's like this headline out of Ukraine and Russia, the Black Sea export corridor. It's on, it's off, it's on, it's off. We might have 5 go rounds of this before they officially come back into, join the rest of the world and end their lockdowns.
Yep. No, I think that's a good point, because if you look at what's going on there, and then, Ukraine blew up or sank a couple of Russia's Black Sea naval ships, and that whole thing there. I mean, so now, yeah, that's such a crazy thing. And then you look at what's going on here domestically. You got this railroad strike that's, out of I don't remember 6 or 8 of these unions that are involved with this. 4 of them like it, 2 of them don't. Now 2 more don't like what they've got going on. So now we're looking at a nationwide railroad strike there. And you look at the issue that we're having in the Mississippi, and it's just like this is a really big problem. When you start looking at this time of the year, especially moving stuff to port for export season.
Yeah, and you throw on top of that the problems, the drought problems in the Southern Plains and the far Western Corn Belt, like out where you're at. There's just no feed ingredients, so we got to get the corn, from over here where we have an abundance of it, over to the Western Corn Belt, the Southern Plains, where there literally is no corn, right, and a lot of cattle. And so it's not like, oh, maybe we can get it in 60 days. I mean, we got to feed cattle today,
right?
And the railroad is such a huge part of that. You can't truck all that. You got to have the railroad functioning, and it just throws another wrinkle in there. It's just unbelievable. I mean, every year I do this, it seems like I've been doing it a long time, almost 30 years now. It's like every year seems like, man, that was an added wrinkle, or very complex. It's not just about how much we raise as far as yields go anymore. And this year takes the cake. I mean, this is even past the COVID situation. All these issues, transportation issues, all the things we talked about, China lockdowns, the war in Ukraine, the interest rates, Federal Reserve. It's just mind-boggling how many gears you've thrown in this thing, and it's the toughest year I ever remember. Trying to kind of figure out where things are going to go. Luckily, we've got really good prices here, and so from an agricultural producer standpoint, it's good to have these problems with all this volatility, but yet we've got good prices. Now, if you're on the feedlot side, I get, we don't really like paying $8.50 for corn because we don't have any. That's a problem, and I get that, and that's been a struggle. But it's a wild one. It's not. I mean, it just seems like this past week is an example of that. It's not slowing down at all. It's actually speeding up with the rate of information we're throwing at this markets from all over, geopolitical and financial, and throwing a crop report next week, and who knows what's going to happen.
Let's talk about that crop report next week. I mean, we're trying to remember, what days that come out on? I forget.
I believe it is Wednesday. That just so happens I've got my calendar popped up here. It is Wednesday the 9th.
Wednesday, okay, that's what I thought. All right, so looking at that crop report, information that comes out of there. I mean, usually the November report's not a big deal, but I mean, as you're looking at now, it seems like every one of these reports that we've had since, I don't know, 2021 has been the non-important ones seem like they're the most important ones.
Exactly.
So, I mean, looking at this November report, kind of what's your thoughts there, and what do you think the trade's going to be looking for?
Yeah, I think the trade's a little uncertain on what to look for, right? We're going to get an update on yield. So we've got 2 more cracks at getting yields. So this November report, we're going to have, yield adjustments or yield projections. They don't do anything as far as yield goes on the December one, and then we got the final one in January. So the USDA has got 2 more cracks at it here next week and then January to zero in on what our yields are. That's only part of the equation. Then you've got the demand side. And so, this year in particular, you've got producers out by you in the Western Corn Belt that literally have had the worst crop they've ever had. You've got producers over here in the Eastern Corn Belt that have had the best crop they've ever had, and everything in between. So it makes it that much more difficult to figure out what the yields are going to be. USDA has a lot of data points. We can cuss them all we want, and I do myself a fair share of that. But they have the most amount of data, and so I think you're going to have people out there that think yields are going to go higher. I think you're going to have people out there that think yields need to come lower, and that sets the stage for a big potential surprise. The demand side is another issue. Domestically, things are cranking. We've got phenomenal crush margins for beans. Crush is, going strong. Ethanol is coming along pretty nicely. Obviously, the feed side of the equation, is strong. Now, the export side on corn is what's a little bit suspect, and so there's people that's probably going to think that we're going to, cut back demand just a little bit. Bean demand is a wild card. China has been continuing to buy beans and taking beans that they have previously purchased. It's amazing that with the Mississippi River essentially closed, that Pacific Northwest becomes much more important. And we're continuing. I think this week we shipped out 36 million bushels of beans. I mean, that's an incredible number given the fact that for all intents and purposes, Mississippi River's closed. So,
Yeah.
We're still shipping beans out of here, and that's a good thing. So the stages, then you have world numbers, updates on world numbers. It's pretty early on in the production year for South America. Brazil's going pretty well right now. Argentina, not so much. It's probably too early in the game to have a lot of emphasis on South American production numbers, but in December and January, those numbers from the USDA are going to start to really matter to the market as well. So you've got a lot out there. It's a real wild card this year with production and demand. And whenever you have that, you set the stage for a potential shock that the market wasn't expecting, and a reaction either way. So it's going to continue to I think drive a lot of volatility around this one, especially the November, and then the final one in January. Real wild cards. And then by January, then we're in the full-fledged South American weather market, and it's just so tight here that you need a big crop out of South America to kind of help cushion the world supply again on beans and corn both. Whether we get that or not, I'm not sure. And if they have a record crop in Brazil, that takes a little bit of the pressure off, and it's going to stay tight as far as the stocks go here. But Brazil will help kind of cushion the rest of the world and with some exports. If they fight La Nina still and have a production problem down there, especially in Brazil, you could argue they already have one in Argentina, but in Brazil, man, it could get really wild and have what normally is kind of a quiet time during the winter. We could have a full-fledged weather market and massive volatility based on their forecast down there.
Yeah, there's a lot of moving parts right now on about everything that you look at, and there's so many things that just one little thing falls off the table there, and it kind of drags a bunch of stuff with it. Jump down and talk about cattle prices right now. As you look at cattle prices where you're at now, they have a good week and a bad week, and then they have a really good week and a really bad week. And so I guess, looking at how that's going on there, I mean, it just seems like there's still a lot of slaughter numbers are still high. We're still trying to work through just the depleting of the herd, and when that starts to turn back around, we got, like you said, we got to get out of the drought in the West here so we can kind of get those things rolling again. But I guess as you're looking at the cattle market right now, Chip, foreseeable future seems like there's a lot of upside to the cattle market right now.
Yeah, there could very well be. It doesn't mean we'll be straight up. I mean, you look at where we're at here, the deferreds are out there, have kind of a challenge 160. So that's part of the problem. Where the nearby is, we're in the low 150s. So out in the deferred, I think we're factoring some of that in, the potential to be that all we've talked about, high feed ingredients, the drought that hasn't fixed itself. The market, I think, is, several months out ahead of us, somewhat factoring some of that in. But to be where we're at here in early November and see cash cattle prices north of 150, pretty stout numbers in here. Typically, we can, increase, gets a little bit, iffy kind of right around this holiday time frame, Thanksgiving, Christmas. But then as you turn into the new year, typically things are pretty good, and we have some higher prices out there into winter and very early spring. Look at the April live cattle right now; they're just over 158. So we are factoring some of that in. I think things get crazy bullish once we fix the drought, and we haven't fixed the drought yet. So if there's some now, although Kansas, parts of some dry areas of Missouri and Nebraska have got some rain, some snow in your case, we need several doses of that. Once we get some pasture back in better shape, and you get cow calf guys wanting to get repopulate their herd that they've liquidated, put it back out on grass if they have some, that's going to tighten up the supply of market cattle even more, and things are going to get wildly bullish when that happens. I would have thought it would. I would have bet and did bet to some extent that would have happened by now, but we just haven't seen the drought break yet, and so there's some really good things I think coming in the cattle market. But we got to break this drought, and it is going on 3 years now. These cow calf guys are really, have had a rough go of it and struggling. And obviously the feedlot guy, struggle there is $8 corn, and there's no corn where they're at. That typically, in the Panhandle of Texas and Oklahoma up through Kansas, it's just no corn, and that's a tough go of it. So, I think things are looking really good longer term, but obviously in the short run, there's still some challenges with high feed costs and this drought situation. Hopefully we can get some better moisture, some snow and some precip here over the winter, and maybe get a nice dose of rain early spring and help recharge things and break this drought. But right now, still very, very dry.
Yes, very dry. I would just like it to be very dry. That'd be very nice if it could just be that. Looking over at the hog market right now, November's been a rough month so far for the hog market. Looking at what's going on there, I guess what's your take on the hog market right now, Chip?
Hog market's been tough. Again, pretty high prices. You've got February lean hogs over 87. That's pretty uncommon for this time of year, especially in the fourth quarter. That's typically we're coming out of a low period, and hog prices are typically low. The issue here is with COVID, supply chain issues, inflated construction costs. We have not grown the hog herd, really, actually, arguably shrank the herd for the last couple of years. And so the numbers are still pretty tight. We've seen the cash market come up here higher, good levels, profitable levels. But like the cattle guy, the hog guy sitting out here, really struggling with high price feed ingredients too. So there's not as much profit as what you would think. That we're up here in the mid 80s and nearby up 90 or above on lean hog prices. So the funds for whatever reason, the last year and a half, that they love trading the hog market as well. It seems like when they get in, they're not trading for like some of these markets, crude oil or the grains or some of these other markets. It seems like the funds stick with it for a long time, many months to over a year position. Doesn't seem like they do that in the hogs. They get in, they run the hog market $15 one way, and then they get back out and take their money. And we've seen multiple $15 runs higher. We just had one. The market kind of got ahead of itself where the cash was, and now you kind of seen it fluctuate back. So we've seen these big swings. I would expect that to continue. Again, I think with no growth the last 2 years in our hog herd, that if we get some better things demand-wise and get this economy kind of stabilized, or a better feeling about the economy in general, that this spring and summer could get really good in hogs. Again, there's, like the grain markets we talked earlier, there's all this push and pull with, is China going to be there? Are they going to continue to buy U.S. pork? They have been so far, not to the numbers that they were previously. What's the world economy going to do? What's our economy going to do? There's all these questions out there. But, I think from across the board, whether it's the grain side, the cattle side, the hog side, yes, there's challenges out there. High-priced feed ingredients, high-priced inputs, but right now, and should be available for at least the next few months, there ought to be some really good opportunities to, lock some profits in, manage risk out here. for the U.S. Livestock and grain producers. So that's a good thing. Got to keep in the back of our minds, South America and Brazil. They're in many ways have kind of taken over as the leader. It used to be United States, and we got a big head about it. And now, quietly over the last 10 years, Brazil is eating our lunch, and they are a massive producer of a lot of different commodities, not just beans. They're the biggest producer in beans now, but a lot of other things, beef included. And so we've got to keep them in sight, but we ought to have some really good opportunities here the next few months as we get out into winter and turn the calendar into 23. Now you get the last half of 23, it's going to get challenging, I think. So we got to, as producers, tighten the belt up, focus on profitability. In a lot of ways, the markets have kind of lulled us to sleep a little bit, especially the grain markets. We just go, we're slopping around in 50, 60 cent ranges, but we're just going sideways for the last 6 months, really. And it's kind of put everybody to sleep. And I think that's the wrong thing. We got to make hay while the sun shines. Is that the old saying? So time to buckle up and be ready to lock some stuff in here going forward.
Right on. Okay. Chip, good stuff as usual. Folks want to reach out to you and get more information about what it is you're doing over at Blue Reef Ag Marketing. What's the best way to do that?
Yeah, just give us a call. Our office number is 309-550-7213. Happy to chat with you and talk about what your current plan is and how you might be able to tweak it and even improve it into the new year.
Right on. Chip, appreciate you being on the podcast, man.
Yeah, thanks for having me on, Casey. Interesting week. A lot to talk about. So
sure.
Hopefully I didn't ramble too long, but man, there's a lot going on in these markets.
There's a ton of stuff happening. So appreciate that, Chip. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. LinkedIn at Moving Iron Podcast, and the ever so cleverly named Moving Iron Podcast YouTube channel where you can see the video version of this very podcast. Go to Moving Iron LLC for everything Moving Iron related, and you can check out the upcoming information for the Moving Iron Summit coming up here in Nashville, Tennessee, September 11th through the 13th. Again, if you want to take advantage of that Axon Tire $50 rebate on your registration fee, send me an email at MovingIronPodcast@MovingIronPodcast.com. Or if you have any questions for any of these spectacular guests on the Moving Iron Podcast, send me an email at MovingIronPodcast@MovingIronPodcast.com, and I'll make sure to ask it when we record. So with that, I'm Casey Seymour with Chip Nellinger. Smooth Iron, folks. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here.